Today, the September S&P 500 futures hit the highest level since February 24th and recently filled the gap on the daily chart at 3,300.75, 3,327.25. What is the significance of this gap being filled?
So a gap to the upside is a natural resistance area, just as a gap to the downside is a natural support area. So with this gap taken out to the upside in the S&P 500 futures, of course that being a natural resistance, that in itself is a sign of strength. So it appears that additional gains are likely for stock index futures.
What is the outlook for the U.S. dollar?
So it appears that there is growing pressure on the Fed to keep interest rates at a very low level, maybe even becoming more accommodative. With that being the case, traders feel that there is some downside pressure likely coming for the dollar index. I would not be surprised to see another test of those two-year lows in the dollar index. So additional pressure, I think, is in store for the greenback.
None of the flight to quality vehicles such as the U.S. dollar and the interest rate futures markets are showing any substantial gains today. So why is the gold market sharply higher?
The gold market has been so strong recently, in fact advancing to new record highs, not because inflation is so much of a threat currently, but gold appears to be a hedge against uncertainty, and that seems to be a driving force taking the precious metals higher, not just the gold, but the silver as well. Of course, inflation could be coming our way longer term with all of the accommodation from central banks, so the trend still appears to be intact. I believe higher prices are in store for the gold market and silver as well.
Steve, what is the latest outlook for U.S. 2020 summer crops?
It looks like over the last 30 days we have seen some pretty favorable weather conditions here in the United States. The one exception could be some dryness in Iowa, parts of Nebraska, South Dakota, and southwest Minnesota. August 12th, the USDA is going to come out with their first official crop estimate, which is a farmer survey, no field survey. Most expect the USDA to increase both the corn and soybean yield from USDA's July guess. This should pressure prices.
What is the latest outlook for world 2020 crops and demand?
Over the last 30 to 45 days, we've seen a pretty big change in perception, especially of the world wheat crop. It's now talked about Russian crop over 80 million tons, a record Canada crop, and a big increase over last year in the Australian crop. There could be 24 million tons more production in those three countries this year versus last year, and a 12 to 15 million ton increase in the supply of wheat for export in those countries. On the demand side, COVID continues to reduce demand both on the import side and also domestically. And I think as long as we don't have a vaccine, that will continue. So the USDA could also reduce demand numbers, especially let's say for exports for corn and beans and wheat, and maybe domestic demand for ethanol and corn. We do look at fourth quarter export demand out of the United States, both corn and beans, could be record high. So it's one of the bright spots.
What are the managed fund net grain futures position and price outlook?
We made new contract lows in corn and wheat this week. We also took out some pretty important support levels in soybeans and made new lows in soybean meal. Funds right now are short corn, short meal. They are long beans but have reduced that position and continue to have a big long position in soybean oil. Most feel that if we have normal weather and continued demand picture, that these corn could trade below $3 in December, November beans below $8, and September wheat here in Chicago could trade down to $4.70, $4.80 before making a seasonal September low.